Hello, and welcome to the webinar, Mid-Year Tech Check 2026, What's Rising and Falling. My name is Anthony Schiavo, Senior Director and Principal Analyst here at Lux Research, and I will be moderating and presenting during today's session. Presenting alongside me are my colleagues Chris Robinson, Senior Director, Josh Haslin, Senior Director, and Yuansheng Yu, Senior Director here at Lux Research. Throughout this webinar, you can type any questions you have into the questions box on your screen. Time permitting, we will answer all the questions that we can. If your question does not get answered, please do not hesitate to email it to questions@luxresearchinc.com and we will respond. If at any point you experience technical difficulties such as a frozen screen, simply refresh your browser and check that your internet connection is strong. Lux Research helps organizations make more confident innovation decisions about what matters most. As an independent research and advisory firm, we work with many of the world's leading companies to identify emerging opportunities, evaluate technologies, and make high-impact innovation decisions. Our scientists, engineers, analysts, and industry experts combine original research and methodologies with practical decision-making frameworks to help organizations separate the signal from the noise. And every day we help our clients answer these sort of three big questions. Where should we focus our innovation efforts? Which technologies deserve investment? And which partners can really accelerate innovation? And today, we're going to share some of our thinking around these questions, especially the first two. That'll really be the focus of today's webinar. So with that, let's jump right in. We're going to start by talking a little bit about some of the innovation themes in 2026. I think they've shifted a little bit, certainly from 2025. And we're going to be highlighting those changes. And then we're going to really dig into the data on what's rising and falling in terms of technology development momentum. And then last, we'll share a few thoughts on how you can capitalize on changes in the innovation ecosystem that we're seeing. We represent kind of the six major areas here: oil and gas, utilities, chemicals, industrials, agri-food, and medical devices that our teams are all working on. And so we asked each of these teams to pick one key theme that really represents what's happening in each of these six areas. And so those themes for 2026 are resiliency and affordability in the energy sector, performance and momentum in the chemicals and industrial space, and refinement and diagnostics in the agri-food and medical devices space. And here you can see that there's really, I'd say, although there's six themes, all of them are linked, and certainly within each of those three sort of major areas, we see a lot of parallelism in those themes. First, in oil and gas and utilities, resiliency and affordability are really two sides of the same coin. Whether it's the war and the closure of the Hormuz Strait, or the demand for data centers, along with increasing heat waves in the United States, you really can't have an affordable energy ecosystem unless you have a resilient one. And we see this in the oil and gas side, right, where the closure of the strait has been consistently driving up oil and gas prices for everything from gasoline to diesel to chemicals inputs. And on the utility side, the major heat wave really stressed, for example, PJM here on the East Coast. And so companies are turning to technologies that can better manage the grid or create new energy resources in order to both create that resiliency, but also try and bring costs down. On the chemicals and industrial side, we see that really, I'd say there's kind of two different stories happening. On the chemicals, performance has been pretty poor, in this pandemic decade. From 2020 on, we've seen that while growth, top line growth has been good, fueled by inflation, the actual returns performance has been quite poor and also quite volatile, right? The various disruptions to the oil and gas feedstocks have very much rippled through the chemicals industry. So now we're refocusing on performance, really optimizing to get the most return out of our existing capital infrastructure, as well as make that infrastructure more able to produce returns in the future. On the industrials, however, you've really seen that they have benefited immensely from the tech trends that have been happening in this pandemic decade, especially AI and data centers. There's been a huge boom in demand for both very specialized equipment, liquid cooling that can go directly into data centers, and even the very sort of standardized equipment, switchgear, transformers, that are necessary to underpin that infrastructure. And at the same time, governments are getting more involved in things like rare earths, right? So there's been increasing demand from strategic buyers for these critical minerals. So all of that is really pushing the results higher and higher for these industrial companies. And they're trying to double down on that momentum with investments in new technologies. And then lastly, for agri-food and medical diagnoses, medical devices, I should say, the story has really been regulation, right? RFK Jr.'s sort of evidence optional MAHA movement is really now the law of the land in the United States. And they are really making fundamental changes in how the health system and the food system is regulated, whether that's targeting disfavored ingredients, things like artificial colors, forcing reformulation across millions of products, or creating new space by deregulating certain sectors, enabling more and more powerful diagnostics from medical devices, particularly wearables. There is a lot of opportunity for innovation in this really brand new regulatory environment that we're operating in. But all this begs the question, which technologies are actually picking up innovation momentum and which are slowing down? And so to answer that question, we are going to go to the data. And our tool for analyzing this data is the Lux Tech Signal. This is really a bedrock tool that we use here to understand innovation activity. It's a data-driven tool. It normalizes a number of different data sets. So innovation records in terms of patenting, academic publications, government funding, venture capital funding, and a number of proprietary data sets that Lux collects. We normalize them, and we really try and focus on early indicators of innovation success and changes in the momentum within an innovation space. And for this presentation, we're going to be focusing on two things. The first is the overall innovation interest. So this is kind of a measure of how much total activity is really occurring in this space, as well as how quickly it's growing. So it's sort of a blended benchmark that captures both volume and growth. And then on the right, we're looking at just the last year's year-over-year change. So that's really a pure momentum benchmark. And that's going to be really helpful in identifying which technologies are continuing to grow really quickly, despite having already a meaningful innovation ecosystem surrounding them. And when we look at all the technologies that we've mapped out based on these different themes, so resilience, affordability, performance, momentum, looking at technologies that mostly have an above average innovation signal here in terms of innovation interest, that's 50 and above, you can see that there's a lot of technologies in that 50 to 70 range in terms of their innovation interest, but there's a much broader spread in terms of the momentum. We have some innovation ecosystems that are growing really rapidly, despite already being substantially active, right? Thinking of consumer health wearables here, right? Novel electronic materials. And then we have some innovation ecosystems that are actually shrinking, despite a pretty solid amount of activity over on the left-hand side. So now we're going to turn it over to each of my colleagues here, and they're going to talk about these areas. They're going to get a little bit more in depth in terms of what's actually happening, and what are the technologies you should be watching for, and the key trends through each of these areas. So first, I'll hand it over to my colleague, Chris Robinson.
Yeah, thank you. We had a lot of options to pick from here in terms of changes for this year, but the one, I would say one of a couple I've been really stressing with our client base is looking at low carbon heat. And specifically within that, been a lot of interest in thermal energy storage, especially within the high temperature regime. And I think what we're seeing here, an accelerating tech signal that's both due toward the tech maturing and opportunities in the market emerging at the same time. We've seen more investments flowing to startups in this space. We've seen a pretty steadily rising number of patents filed, but also we're now seeing projects getting built. This is an area where counter toward hydrogen and maybe direct air capture, where project momentum is slowing, we're seeing acceleration, right? EU's heat auction is probably the best example of this. Several projects have been funded with non-dilutive grants as part of a bigger $1 billion program. And the reason I really wanted to stress this today is also I do think it balances this kind of security and affordability we think about in the energy ecosystem. You know, electrified heat isn't just about decarbonization. It can be a pathway toward lower energy costs and potential lower fluctuations, lower volatility in your energy costs. But the key is getting low-cost electricity. A big way to do that is by storing thermal energy, consuming electricity when it's cheap. Right, so we see both a pathway toward better security toward your energy supplies as well as affordability. So keep a close eye on government support. Again, this is an area where we have seen governments more active, trying to get away from consumption of fuel or make consumption of fuel more efficient. And lastly, also keep in mind that we're talking about generally more complex projects. This isn't like just building a solar plus storage project where we have a modular approach to components, where we have a lot of power electronics and existing tools to really just kind of plug and play those types of projects into a local electricity grid or an existing building facility. These are more custom engineering projects. The exact temperature of the heat you're delivering. Is it steam? What's the wetness of the steam? There are a lot of variables that require more, I would say, upfront engineering compared to some of these more modular microgrid type projects. So that was kind of looking at oil and gas. If we move on to think about utilities as well, flexibility has been the one theme from an innovation perspective we've really heard come to the forefront over the last maybe 2 or 3 years. The driver behind this really is congestion and load growth, right? Speaking from a North American in kind of European perspective, those regions have seen relatively flat electricity load growth over the last 2 or 3 decades because of improvements in efficiency. But the word of the year, right? Data centers really catalyzing a lot of load growth, electricity consumption. You have electric vehicles now, roughly 20% of global vehicle sales. So you have really significant load growth for the first time. And expanding transmission networks to be able to handle that is challenging, as well as building new generation projects. So, DERMS, distributed energy resource management systems, is really that software layer that is absolutely crucial to demand management and flexibility at the grid edge. What we've seen is really not just startups focus on visibility and control, but also orchestration. So how do you get these assets also participating in electricity markets, providing flexibility services, not just giving kind of control and an ability for distributed assets to just participate in some of those markets today. So looking at the future, I think this only becomes even more important. We're seeing an acceleration of storage deployments, an acceleration of electric vehicles, which I think are the 2 assets that are most valuable to these DERMS platforms. So again, this is an area we've seen a really dramatic acceleration of the tech signal. It's really all of the inputs. Its patents have grown roughly 4-fold in the last 5 years. Investments have been rising. And now really the time is for implementation. We're seeing deployment of these solutions because the market need has become so significant over the last year or so.
Thanks, Chris. I would like now to hand it off to my colleague, Yansheng Yin.
Yeah, thanks, Anthony. So for the chemicals industry, right, the defining theme that we identified at Lux for this year was performance, and I think that spans both financial performance, organizational performance, and of course materials performance. And I think a lot of the trends we've seen so far in the first 6.5 months here really speak to that drive, especially around materials performance, where we've seen this theme play out with a sharpened focus of the industry looking at new and novel materials again. And one of those materials is novel electronic materials, which we took a closer look at here on the tech signal on this screen here. But when we talk about performance itself, it's not just playing out with novel electronic materials where performance was finding this new material with better functionalities, better capabilities. A lot of the innovation focus is about performance, where it's defined by not just the properties, but whether those materials can be actually integrated into manufacturable devices and application-specific systems. And as you can see in the tech signal here, there is growing innovation interest across all novel electronic material types. Electromechanical, which is a little bit more well established to more cutting edge neuromorphic and quantum materials. And all the underlying activity we're seeing is moving towards more process integration, semiconductor compatibility, and co-development with device manufacturers. So simply put, performance in 2026 for chemicals when it comes to materials performance is becoming multidimensional, right? It's maximizing material properties, but also maximizing manufacturability, integration, and application readiness. And focusing on the latter is where we're seeing the path going forward from pure materials innovation translating into more defined commercial performance. And in terms of the industrial sector, the theme was momentum, and it continues. And to pick up momentum for the industrial sector, we're seeing that currently playing out, especially around things like critical minerals. Challenge is no longer about finding new sources or finding new supplies, but it's now being tailored to around the narrative around building resilient supply chains for those important materials so that this momentum can continue. And of course, within that, novel critical minerals extraction is really the key technology that we've seen an accelerated interest in innovation activity and attracting strong near-term investments, especially in things like direct lithium extraction technologies or DLE. You can see that really pick up post 2020 when critical minerals became top of mind for not just the industrial sector, but for global economies across the world. Now, why novel critical minerals extraction? Well, we're seeing improved recovery rates, reduced resource use such as water, and more importantly, the potential for deployment alongside existing operations in the mining sector, but also tapping into underutilized sources such as oil and gas wells and brines. So DLE is thematically aligned with the industrial sector seeking scalable, lower risk investments. Alternatively, though, you do see biomining here. That is still generating interest, but it's much more longer term solution for consideration by the sector. Now, for the industrial sector to continue its momentum, supply chain resilience will now be one of the defining factors behind it. And seeking out opportunities across the value chain from extraction to refining to recycling will continue, and we see grow in even more importance the latter half of this year.
All right. Josh, what's going on with the agri-food space?
Absolutely. So, the word here was refinement. And I think you can see something quite different in the tech signal than what we saw in the other sectors, right? There's a lot of different shapes here. And what those tell us is food innovation is shifting away from novelty to some degree, or has shifted there, to commercial execution, which is in alignment with refinement. So all these technologies, whether it's innovation in colors, flavors, preservatives, textures, right, have went to their first innovation cycle. We're now making decisions on what to do with that. So we see capital concentrating in companies that are solving key needs. The best example here, if you look in the dark purple, is texturizers. We have this dramatic increase followed by a dramatic decrease. And then around 2020, a rejuvenation of this space. Right? And that rejuvenation was exactly this refinement we're talking about, taking technologies that were developed and really focusing them on needs that solve consumer needs. Right? Texture is one of the major ways to engage with consumer sensory experience. So seeing that come to fruition here is really important. But it's not the only signal here, right? We also see areas like preservatives being consistently of interest and remaining important because safety remains such a key priority across the industry. So as you think about those spaces, right, we see this consistent investment, maybe a desire also to continue to innovate further in the future and begin to think about H3, H4 innovations, which is new this year. So it's not just about refinement. There's a small piece of that refinement that's also saying, what is new out there? And we see this in one particular way. I think there's a great example if you look at flavors. One of the largest challenges we encountered this year has been the price of key ingredients, cocoa being one of the most important ones out there. And this bump in the flavor signal that we see here that happened 2024, 2025 is really a large focus from the cacao industry. And now what we see is just this year in 2026, companies making consolidation efforts in that space, particularly as it relates to alternatives. So, here's a signal of refinement saying we need to solve a challenge. These technologies have been around for 6-7 years still, but they're finally getting pushed to commercial scalability. And this is what we're going to expect for the foreseeable future. Prioritize the technologies that are scalable, clearly aligned to regulation or some other core challenge around functional performance. And these things are moving to cost parity. So it's a pretty exciting time for agri-food, and we expect that to continue, but also lend itself to looking for the next piece of innovation that we need moving forward. So really expect companies to be looking long-term as they come up with their refinement plan and stabilize that refinement plan. We have a different story for medical devices and diagnostics. Looks a lot like, I think, what Chris and Yunshen brought up for theirs, where we have a lot of early stage technologies growing. The major highlight here is at this area of innovation that's responsible for a lot of the changes in organizations, and that is diagnostics, but not just developing new diagnostics. That's okay, but where most of this innovation is focused on is creating closed loop platforms. So taking a medical device that's a therapeutic and connecting it to a diagnostic, and then of course between those two having the AI lens that allows you to understand the change in symptom and then direct the therapy as a result. Medical device companies are seeing this. So for diagnostics that have very strong clinical validation, those companies are getting scooped up very quickly for consolidation efforts. The challenge that we're faced with in the medical device industry is it's still a conservative investment space. Money is still expensive, and clinical validation comes at a premium. So companies still do need a pretty long runway and runway for financially to make it to that point. But that said, the decisions are happening, and we do see this frame shift where medical device companies are building these closed loop platforms, and that is a big deviation from just a few years ago, where everybody was maybe thinking about the parts but hadn't put them together yet. So really monitor this. I think it's also important to remember that some of the things around different materials flow into this. So if you're interested in materials, we just recently had a webinar on the future of materials for medical devices, and I would implore you to take a look at that and connect the dots here, because a lot of those materials are responsible for helping connect the dots between these devices and where you can apply diagnostics together with therapeutics.
All right.
Yeah, so back to you, yeah.
I want to thank all three of you so much for highlighting those technologies. And now we want to maybe step back from the individual technologies a little bit and talk about how you can actually capitalize on these changes. Whether it is changing how you approach innovation or changing where you approach these innovations, actually getting a little bit into doing the innovation, because understanding the technologies, that's just one part of it. So we're going to hear from each of my colleagues again. And so I want to start with Yunshen, I believe, taking this segmenting innovation slide.
Yeah, absolutely. I think when it comes to looking at our Lux Tech Signal and innovation interest, I think it's important to stress that not all innovation interest is created equal, right? There's many different drivers behind that innovation interest. It can be purely academic, it can be a robust startup funding ecosystem, or it could just simply be a mainstay in corporate R&D. And when the stars align, it's a combination of all three. So if we dive into that data, we can actually see another element of the Lux Tech Signal. You have innovation magnitude. That's the sheer volume or push that's happening behind the technology. So while interest may be high, it's also important to know how mature or how much magnitude there is as well. So the example here you have on the screen is if we looked at novel electronic materials. Again, you can see the innovation interest on the x-axis, just like you did in the tech signals earlier in the presentation. And then on the y-axis, you have innovation magnitude, which is the sum of patents and papers from the last 5 years. And here you can see not all innovation interest is created equal, right? So while similar in interests, electromechanical and neuromorphic materials, they're worlds apart in terms of the body of work that has gone into it. Remember how big of a topic energy harvesting was a decade ago? A lot of that is the reason electromechanical is so high up in terms of innovation magnitude. But more importantly, from here, you should be able to identify how to engage with the innovation, right? Whether it's an already well-established area where focus should lean more towards application development, or is it still an early exploratory area where engagement comes best in the form of R&D to address a lot of the technical questions that likely still remain?
I do remember the work on electromechanical materials. Josh, I think you wanted to talk a little bit about discovery and dabbling here.
Yeah, so you're talked about magnitude, right? Looking at the magnitude of that signal and how that impacts. What I want to talk about here is shape, right? Shape of the trend that you're seeing. And, we like to follow technologies across the start of the conversation all the way towards, commercialization and what that looks like as it enters and makes an economic impact. So what you want to do is be able to break this down for any particular signal you see out there. And we do that in a couple different ways. One is we're often thinking about what a discover signal looks like. Now, this has kind of two forms. One is for early stage tech, right? Before, there is a major focus on that innovation interest, we might need a solution to solve, right, a need. What's that look like on the tech signal? It often looks like a flat or undulating line back and forth, right? No clear trend. And this is a great notion for discover. Now, in this particular case, you'll see that it's a very low number, right? But I would argue in a lot of cases that magnitude that you see doesn't tend to matter for discovery. I brought up an example earlier with food preservation. We had a lot of food preservatives out there, and we can see that signal remained consistent at about 40 or 50. But the other part of that is we also have emerging regulations and challenges with the food system that require different food preservation techniques, different challenges to overcome. We can bring up the cyclospora event that's happening here in the US right now as we think about cleaning lettuce and other vegetables for that matter, right? There's still major gaps. And that's often what comes out when we see those because there's no clear trend on what to innovate. So we need to think about what to discover and where to put that forward. The second place to think about is dabbling. So what happens when you see a signal begin to have a major change, right? A major change in the direction of that signal. And this is an upswing direction. That's a great time to dabble because resources are moving towards an innovation. But the direction, the final direction of that innovation is maybe unknown. You can determine whether or not that is important for your industry or not. So this is often a great time to dabble. And again, I brought up a great example of this too, which wasn't an introductory signal, but was a sort of second round of innovation signal in texturizers. It was increasing from 2020 to 2024. And now's the time to dabble, to take those technologies and apply them because, in a lot of cases, they're beginning to be moving towards commercialization. And that's exactly what we see in the industry in that particular case. What does it look like to actually make that come to life? What are the challenges you need to solve? And if you do solve those, what we tend to see is we move from dabble to a peaking of that industry, that particular technology, and then it becomes commercialized. So as that signal starts to taper off towards the top, it's another great signal for commercialization. So that's a great way to use this notion of discover and dabble with the shape of the tech signal to understand, again, what's that technology doing and how should you engage with it versus what Yuan Shang brought up with the magnitude discussion.
Thanks, Josh. And Chris?
Yeah, I think maybe just to kind of conclude the discussion today, we've talked a lot about here are the things that are emerging, here are the drivers and trends we're seeing. This is really important, but I still think the number one pain point I hear from a lot of folks we work with in innovation teams is, what is the ROI of my innovation function, right? How do I, not just find the right trends, but actually execute on them in a way that makes my organization money, right? And I think there it's worth thinking about not just kind of the product and technology readiness side of things or thinking about TRL levels, but really making sure, that there's market organization, right? There's a supporting ecosystem of infrastructure that might need to exist to bring this about. There's market readiness, right? There are customers willing to buy the product or innovation being discussed. And of course, not to be overlooked, production, right? Are there raw materials? Are there the right engineering and production skill sets that exist to bring an innovation about? I think a lot of the things we've talked about vary from software, where these barriers are lower, toward things like critical minerals extraction, which exists kind of as an answer to those particular challenges. But really important as you start thinking about some of the emerging trends we've highlighted, to also start thinking about, how does this fit into my organization, and thinking about timelines for scale for some of these opportunities.
All right, and so with that, I want to leave you with just a few key takeaways. The first is it's really critical to pinpoint how to engage with these different technology options, right? We touched on this earlier, but these different sources really drive different levels of innovation interest. And if you're not digging into exactly where the momentum is coming from, you aren't really able to shape your strategy. So that's something that we can definitely help you with as you think about scanning a wider number of these technologies. The second thing is that it's not just about dabbling, it's also about defending your right to dabble. I think in this very volatile environment we've been living in the last couple of years, innovation teams have been under more and more pressure than ever to cut costs, to generate near-term returns. And the reality is you need to experiment with some of these longer-term technologies. You can't prepare your company for these longer-term challenges if you're not doing that. And that requires a very active campaign of messaging up to leadership and messaging to the C-level about the criticality of exploring these technologies. And last, we really see that the megatrends are creating the conditions for technology adoption. But you need to understand where these technologies and these market signals are pointing, where they're aligned, which individual technologies are really going to benefit the most, and how this is going to enable these technologies to scale for success. So if you can think about doing that in a comprehensive way, you can really be prepared to act when the time is right. And so with that, we want to say thank you. And we're now going to be taking questions. So if you have questions, you can type them into the questions box. We don't have a ton of time for questions, but if you don't get to your question on this call, we will be in touch after the webinar. So fellas, I'm looking at the questions, and I think there's a number of different questions in here. But there's one theme, and there's one technology that's in the headlines a fair bit, but did not come up in our talk. And that is, of course, everything space related. Perhaps most emblematic, the SpaceX IPO, but there's space data centers, and there's space satellites, and there's a whole space economy. So I'm just curious if you had any quick thoughts on where you would sort of position space tech or the space economy, whether it's from a materials perspective or from even an energy and a data centers perspective. How are we thinking about this? And I think, Chris, you mentioned before the call that I know we've talked about some of the space stuff in the past, so maybe I'll kick it to you first.
Yeah, it's come up, especially a lot last month. I've been doing, a few client visits, visiting our clients, and I think 2025 is all about kind of what's the next big shiny object, right? Is it AI? That's sort of an opportunity for the energy industry, and space feels like it's kind of the one theme that's emerging within 2026. I think two things. One is this is not going to be $1 billion opportunity for the energy industry. I don't see a way for energy companies to really kind of make money off of the burgeoning space economy. I think we'll have better visibility into terrestrial assets, right? So things like greenhouse gas monitoring, inspecting assets, those sort of things I think will become better, cheaper, and a bigger part of operations. But as an opportunity to pursue, I don't think when we look at orbital data centers, space-based solar power, very deep fundamental questions about the feasibility of those. And I don't think it's really something we expect to see, emerge in a significant way. Some of the emerging use cases of space that we've talked about, but I know there are others in manufacturing and agriculture as well that we've written about, other applications as well. I don't know if Yuan Sheng and Josh, you have anything to add on the space side of things?
Yeah, I think it aligns quite well with both the sort of performance-based materials and also critical minerals, right? Space mining has been a concept for quite some time, and if you can't get it on Earth, then you just need to find a new novel source for it, and that's always been under consideration. However, I think going the opposite direction in terms of deep sea mining has a little bit more legs at this moment than space mining itself. But I think for the material space, it is interesting because if the space economy were to grow and, take off, no pun intended, the way people are projecting it to, there will be a lot more higher demand for advanced materials, whether that's, higher triple alloys to handle high temperature conditions, lightweight materials, etc. So there's definitely some interest there, but to Chris's point, I think it's also not as tangible yet today.
Yeah, and I think the same. I mean, Chris brought up the main point for the agriculture industry, right? More coverage of the world equals better coverage of the planet as far as understanding it and monitoring it. So, that's great. That'll continue to do it. However, general images don't necessarily help. You do need advanced sensors to see through clouds, right? And actually then understand what's happening below those. So, a typical satellite's not going to prove it. The advanced satellites are going to be what improves that. And then, it's funny, as always for food and health for that matter, space continues to be a place for discovery. It always has. We have several discussions every year with clients looking at what discovery looks like as a result of things happening in space. Now that maybe is the one thing that's shifting. I see more of space focused on industry versus being focused on discovery in the way as it was in the past. And we'll see how that plays out to see if, the future of circular X continues to be developed in space if we spend more time there. But those are typically the things we're looking out for. It's a great platform for discovery, but has slowed a little bit in recent times as some of the focus on more of the core industrial manufacturing industries have, I think, taken center stage up there.
Well, there you go, y'all. It's not necessarily going to be about putting data centers in space in the next year, but there are some interesting opportunities. So with that, before we conclude the webinar, I want to mention that we are conducting our annual innovation survey. This focuses on benchmarking, it focuses on risk. You can actually participate in this survey if you scan this QR code, fill out the questionnaire. It should only take about 5 to 10 minutes. You can fill it out totally anonymously if you so choose. And if you participate, you will receive the results of this benchmarking exercise. So I encourage everyone to fill it out anonymously if you'd like or not, and really help us build that benchmark of innovation performance across all these different industries that we serve. And with that, that is going to conclude our webinar for today. The slide presentation and recording from this webinar will be sent to all attendees via email today. And after leaving the webinar, you will be prompted to complete a survey on today's presentation. We really appreciate any feedback that you have, as this always helps us inform and improve our future webinars. And I also encourage you to check out our upcoming webinars on our website. Thank you so much, and have a great day.